we have seen a day of sharp declines. We have seen the Sensex tumble over 1,000 points, the Nifty tumble over 250 points. So both the benchmark indices really declining over 1% in trade today. We've also seen the rupee weakening to an all-time low of 84 rupees 92 paise to the dollar. So what really is causing all this as far as the market momentum is concerned? Well, I'm joined by Sanchita Mukherjee, senior business economist. I'm also joined by Anand Ladda. He is the founder of Invest Aaj for Kal and also a registered mutual fund distributor. Thank you so much for your time, both of you. Anand, first to you, really. What do you make of this? Are investors eyeing the Fed policy or Trump's takeover? What is really making investors so cautious suddenly?
See, I feel this week we have Fed's policy and everyone has discounted 25 bips rate cut, but with a hawkish view. That is why it is not only the Indian market which are sliding down. In China, we saw an inflow of 5.6 lakh crore rupees. Still, they are sliding down. Dow Jones is down straight from last 7 sessions. So everyone is a bit concerned about the policy which might come. And it is not only the Fed, 22 other central governments are also putting out the policy. So before the policy, we are seeing some profit booking, which is absolutely okay, part of the game.
It's part of the game, says Anand Ladda. But Sanchita Mukherjee, what do you feel? Investors clearly being cautious, looking at the Fed policy, the Trump's takeover also many believe with the policies that may come in. So your thoughts really, what really is the reason for markets to witness this sharp decline today?
Yes, 100%. Very well put, Sakshi. And I completely agree with Anand as well. I think right now, ever since the US election results were out, the US markets have been in a euphoric state in terms of the promises that have been there, which are clearly known as Trump trades. And this essentially means he has promised to lower taxes, less government in terms of bringing down more regulatory shackles which were there in their financial services, import tariffs to be made higher. All of this is a very big positive for US markets, and US dollar has actually increased in valuation. So there's a lot of flight of capital currently, which is happening, as Anand pointed out, from emerging markets, from developing markets to US markets. That is happening in the short term. In the long term, it remains to be seen how the Federal Reserve actually reacts, because Trump policies also mean very expansionary. They are in a situation of a very high debt in their economy, right? Inflation is very sticky, and cost of goods and cost of living can actually go up because unemployment is very low. So people will purchase. So it depends on how much of a follow through he actually does in the medium to long term. With respect to Indian equities, what I would like to say is we've had a stellar last couple of years of runs, right? And if you were to see the FDI numbers, FDI, I would mean direct investment into India in 31 states and 57 sectors, that itself has been stellar. It's almost 119% from 2014 to 2024, which is stellar FDI investment. When it comes to listed space within equities, yes, the valuations are comparatively much higher vis-a-vis other developing markets and emerging markets. Hence, there is always a tendency for FIIs to do profit booking at higher levels, given that the US dollar has strengthened. And they keep doing that time and again in the short to medium term. But in long term, the Indian fundamentals, the fact that it's the biggest consumption market in the world, there are policy reforms which have happened and will continue to happen. All these things mean very well for the Indian markets on a long-term basis.
Right, it's about fundamentals, like Sanchita was saying. So, Anand, do you agree? For all those wondering and tracking markets as closely as you do, what really are the sectors they should be bullish on in the near term as well as in the medium to long term?
See, firstly, I'll talk about strategy. If you are a trader, I feel you should know how to trade shorts also in the market. So if you don't know how to short the market, or if you can't play both the sides, better be cautious than be sorry later on. If you are talking about investments, I feel sectors I can name three, but better would be if we go with a multi-cap or a flexi-cap fund SIP for next 6 months. I feel next 3 to 6 months might be more volatile as compared to what we have seen in last 3 years. So for safety of all the investors, doing SIPs or doubling down on their SIPs might be a good proposition. Plus, at the same time, if you have a near-term goal, for example, if you have a goal for which you need funds in next 1 to 2 years, probably you should not put that money in markets and uh, use some fixed instrument or maybe short-term gilt fund to park that money. Just to name sectors, I feel three sectors which might do well even when markets are not doing that well. Firstly, it can be the banking sector because banking has underperformed in recent past. Secondly, can be the infra because of the budget which is due in next quarter. And in budget, again, I am personally expecting more than 11 lakh crore of allocation to the infra. And finally, third would be the insurance segment because every time we need insurance, whatever be the situation in the economy. That's it.
All right, Sanjay, final word to you then. Do you agree with these sectoral calls? What sectors do you feel one should be bullish on in the near term as well as in the medium to long term? Remember, 2025 isn't far now. And for those tracking this, saying that, okay, we are seeing volatile times, we are likely to see volatile times, as Anand was explaining, due to, of course, a whole host of factors. But what sectors should we be looking at then?
Before I come down to sectors, again, which I wholeheartedly agree with Anand, I would like to talk about caps. I think in the Indian market, since I was talking about the valuations, micro caps are very frothy as a segment. Mid caps are also overvalued as a segment in today's date as well, because there are very few mid caps in the definition in the listed space. So mid caps and micro caps are extremely frothy. Large caps do offer attractive valuations because a lot of FII focus do happen on large caps. A lot of small caps, which are a huge segment of the Indian market and a huge participation of the Indian growth story, remain fair valued to overvalued in pockets. One needs to understand, and within that, one can definitely look at sectors in financial services, even in IT, in services, in construction, cement, infrastructure, all of that, pharmaceuticals, generics, everything. So I would think that right now, the strategy that Anand spoke about in terms of continuing with SIPs in multi-caps is a good strategy from a long-term basis. And a short-term, if one were not to look at the volatility and one were to have short-term goals, one could stay away from the equity markets because we do see a time correction of sorts for the next 6 months.
All right. So very, very crucial advice there from both of them. Thank you so much for sharing your thoughts. And we will, of course, continue to track how the markets perform.